Hi, this is Zak Mir, editor of Spreadbet Magazine. We'll look at some bulletin board hero stocks on Wednesday, August the 20th. And I'm starting off with Blinkx, where we've got what looks to be a triangle breakout here on the daily chart. We've seen actually these type of situations before. If you look back, there was a triangle going into the gap down in July, and also similar maneuver in February, March as well. Probably what we're looking to see is what happened in February, March, where there was the break out of the triangle. We hit the 50-day moving average and then came back down again, but at least there was a decent chance to go long towards the 90 pence level and taking the shares up to £1.20. In this situation, looks like we've got a break, we've got a little break here to the upside through the top of the July triangle, which is level with the 20-day moving average at 32 pence, and then a similar move to what we saw at the beginning of the year would see a spike towards the 50-day moving average at 42 pence as a best case scenario. That would still be sort of towards the floor of the July gap down that we saw, which was such a vicious move to the downside after the warning from the company. Just to underline here, we've got the RSI resistance line break as well, which gives us a little bit of positive momentum, and also the higher low for August versus July, which was towards 27 pence mark. In terms of the stop loss, really the floor of the triangle around the 30 pence level on an end of day close basis would be more than sufficient as a risk reward situation, which is going to give you possibly as much as 10 pence if the shares behave themselves. Moving on to Octagonal, and here we see a rather simpler chart here, basically a rising trend channel since the end of April. Minor bear trap here below the 50-day moving average at 0.43 pence and just below the 0.4 pence level at worst. Rebound off a June support line in the RSI window, relatively obscure thing, but really it's all about the rising trend channel here with its resistance line implying a 0.7 pence target. That would be valid really while there's no end of day close back below the 50-day moving average at 0.43 pence. So in theory, we've got a pretty good risk reward here. If you want to stretch the stop loss down below 0.4 pence, obviously that might make things a little less fraught over the next few days. Going for Quindell, obviously after the break to the upside yesterday, this is quite similar in a way to what we've seen what are seeing at Blinkx, in the sense that you've got a triangle formation here, normally a continuation pattern, and that is possibly what you'd expect over the longer haul. But we have had a sharp snapback above this triangle from the beginning of May, approaching the 200-day moving average at 204 pence as at the best level yesterday. We've also filled a gap up to £1.97 as well, which was from the beginning of August. So as things stand, the shares may struggle to deliver more upside, but I'm still looking for a retest of the main post-July resistance area up to £2.50 as a best case scenario here, and the obvious stop loss, an end of day close back within the triangle at £1.71, which is also the position of the 10-day moving average. If you want to have a tighter stop loss than that, you'd have an end of day close stop loss back below the 20-day moving average at £1.85, which seems much more palatable if you are still unsure about Quindell. But it looks like we've got at least an intermediate rally here, even if the shares have not quite done enough yet to deliver a sustained rally. That's it from me. More updates at spreadbetmagazine.com.